Hey, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for July 18th, 2024. Should just note the next annual coaching cohort starts on October. And it's a year-long program with weekly meetings. We'll accept early registration with a 10% discount until September 1st. Details available on the website at tortoisecapital.net. We'll be using this professional performance model to help us become more confident in our communication and our work. And there we go. This was the artifact I made last night during my coaching and hypnotherapy session. Spiral Mountain, climbing the hill of excellence from our position of safety and advantage, overlooking the meadows and the herd down below. Sort of a metaphor for performance. First sniper trade of the day we'll start with. This is EWZ, 10-minute chart. Yesterday's close, gap down, the 10-minute opening range. The next bar broke out higher, so I'm long. Standard risk, -1R. That's the reversal move, standard risk. Second position on a collapsing dragon. And exit at the usual spot. That was pretty aggressive, but the market was starting to collapse right there. So that's 1 unit of risk. So we get 2 on the first position. Then this one gets an additional 1. So that's +3. Re-entered collapsing dragon for another 1. So those 2 scratch. So +3 for the day in Brazil. This is DIA. Also on 10-minute. Here was yesterday's close. Here was the gap down opening. Here's the OR10. Next bar breaks out higher, so we're long with a standard risk. About half an hour. Crosses the, so this is like 0.5. The R10 rolls over, enters the dragon, crosses the spine, leaves the dragon, crosses the VWAP, crosses the Bollinger Band mean. So now I'm short. There's your PSAR flip. There's your standard risk. Check or hold? There's an exit after the R10 reverses. There's where it hits the skin of the dragon. There's 1 unit of risk. So 1, 2, +3. What would we call this entry? Supported spring crossing. Why? Oh, harsh winter. R10 crosses the RO30, crosses the dragon, PSAR flip, standard risk. -1, stop and reverse, because this is a kata 2 continuation of the last win. That gains 1 back. So those 2 scratch, so we get plus 3.5 for the day on DIA. This one is EWW, Mexico, also on 10 minutes. Yesterday's close, here's the gap down. It sells off all the way to here, reverses all the way to here, and closes. So that establishes the OR10. It breaks out, so I get long. With the standard risk, take minus 0.5 loss. Next bar continues to fail, so get short, standard risk, plus 0.5. Kata 2 continuation to the downside. Collapse. Exit near the close. The dragon skin is your friend. One unit of risk. 1, 2, +3. Those 2 scratch, +3. So that's about +10 for the day. Trading in a standard way. We're using standard patterns. Our advantages compared to everybody else. We get better tools, training, resources, and a better team. And we're leveraging all of these elements to trade standard patterns, to take the targets with sniper precision, to do daily after action reviews, informed by statistics, using evidence in support of our beliefs, using risk management to lock in our learning as a wedge against backsliding. We're using standard patterns, standard entry techniques, standard exits, and documenting our learning in a professional way. Spending most of our time concerned about how to manage the ongoing trade until it decides to exit by hitting our stop. We use just enough technique on the entry to just get in. The secret is that we're finding compound critical states that offer moments of compression in which our reward to risk in either direction is 3-1. And we have learned how to lock in our stops and then let the trade be what it is. And we use our learning and statistics and coaching to improve our professional performance and to be able to talk about it with confidence, with professional language, learning to overcome what at first look like weaknesses, but which then become strengths after you learn to develop them with resilience, focus, maximum sustainable rate of learning, until you too are resourceful and can build powerful teams focused on your mission and treating your work the same way every master craftsman treats their work from the day they discovered their vocation and began to learn all the way through the development of journeyman expertise to the point where they had mastered their craft. That's the secret sauce, and it's not secret, it's just rare. So learn to put these things in towards your advantage when, because the market only cares what you do. It doesn't care why or any of that stuff. It just looks at what you do and what they do, and this is where your winning edge comes from. Let's take a look at the traders. Where are they? Thought I had them open. Stand by. Oh, that beautiful spiral mountain. Hamad trading DIA out traded me today, bringing home 4.6. And he's a little disappointed with his performance overall, although I will tell you this is pretty solid in DIA for 4.6. He's got some areas to improve on in EWW. Like, I think maybe he's over trading a little bit in his view here. And when he sees this one, he doesn't take it because of dissatisfaction with his performance in here. But they all look the same leaving the river or leaving the station. So there's a learning point for you there. Paid for by DIA and a positive day. And reasonable work here. Maybe there's a re-entry in here, but it was hard to squeeze a lot out of that. Here is, let's see, Chi Weng gets long, cuts it, does not take this. But then takes it here and gets ticked out, does re-enter, and so he's able to fight his way back to zero. That bias in the morning, we want to be directionally neutral and follow the price, follow the rules. He crushes it though on DIA with 3.4 and in IWM for 2.8. So that's 6.2. Pretty good day at work. We'll take a quick look at the reports for tomorrow. Doggone it. Stand by. Just listening in to my daughter's in processing for medical school. Stand by here. All right, let's take a look at today's report. So the 150-day look back. We've come down from the all-time high all the way down to here. This was that warning shot for exiting that we talked about yesterday. Wouldn't hurt my feelings if you had exited today. We made we got the 5-day low here, is now the 10-day low. So clear warning. Tomorrow should be fireworks. You can see all of the various VWAPs have all rolled over. So fair value is about 559. That little bit of panic selling that came all the way down to here to 551 and then rebounded slightly to 552 and a half. But we're perilously close to Bollinger Band mean, which would give back that entire move. And that's why I was saying yesterday, 556 was a reasonable place to exit today on the longer term positions. Yeah, you can see today's price action on the 30-minute, how this entire complex, day one of the sell hard, day two accelerated all the way down before rebounding. So this was the indication here, 556. Talked about that yesterday. If you had exited here, you protected against all of this pain and suffering. And here's the next target to the downside is that 30-day anchored VWAP. That's if 548 breaks tomorrow, look out way below. There is some room for this kind of a rebound, but that's going to be a tactical trade. I am not interested in holding new positions over the weekend. I'll tell you that much. You know, this is what buying and growth looks like. That was a warning. This was sideways chop. Day one of selling, day two of selling that is accelerating. And that's why that's a line in the sand right now, if you're still long. Bullish normal, short-term weakness, increasing downside volatility. You got some buy on dip opportunities for sure, but it's going into a weekend. I expect some tactical play in the tech, but I'm leery about holding over the weekend. Your mileage may vary. In the Dow, there were some upside breakouts, interestingly, in Chevron and ExxonMobil in the energy space. NVIDIA, Intel, Texas Instruments, among the few bright spots in the large caps was the semis. A hint for tomorrow. ETF 30 weakness in uranium and NASDAQ. A handful of auto framers, and this is some good day one type trading tomorrow. Microsoft, Tech, and NVIDIA. So there's a short-term opportunity in that developing for tomorrow. Let your conscience be your guide. No squeezes except DBA better than 2. Today was directional. Still a large summer component in the Four Seasons of MACD, but starting to see fall creep in. The frog value list for excellent intraday traders. There they are. NVIDIA, Tesla, Nucor was excellent today. Clean energy. Uranium was good. Marijuana. Brazil, Texas Instruments, McDonald's and Devon. Even energy is pretty good right now with a really strong frog quality, very consistent. Second day of selling. We said that yesterday. That was the warning shot. Today was the directional move. And if that breaks below 5, it already broke. Look out below. The 30 period regression line slope crossed over its 10 period moving average. Danger. Lower highs in the slope. Last time it did that, critical state right here. The 30 crossing the 90, and we've come back inside the river. Potential short-term weakness, and the 10 is already pointing the way lower. Tomorrow could be a volatility event going into the weekend. All right, let's be ready for them tomorrow. Tactical trading is in order. Tech is an opportunity. Semis showing strength, as did metals. Otherwise, be ready for a ride and be very clear on how much risk you want to have over the weekend. That's everything for tonight, fellas. Take good care. We shall see you tomorrow.